Hello, good afternoon. You've tuned into CNBC TV18. You're watching Your Stocks coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. Markets, the slip that we saw coming in yesterday's trading session, the second half, seems like that's continued. And today, again, we're seeing a further slip coming in the last half an hour as well. Right now, when you're looking at the Nifty, 25,740 levels, down more than 140 around points for a Nifty 50. 0.5% of decline. Day's lowest point around that level is what the Nifty is trading at. 25,700 is an important level that we'll again be keeping an eye out on. Now, other than that, let's look at Bank Nifty. That is also under pressure today. It's down almost 1% in today's trading session. So that is something that's seeing a sharper decline. FMCG, again, that's also down and out in today's trading session. And in the FMCG names as well, we're seeing a lot of pressure coming in for some of the names that in the FMCG pack. HUL obviously was under pressure after its earnings that we saw. But today we have Colgate, Patanjali, Radico, which are also under pressure in today's trading session. Metals, on the other hand, is doing well. So Nifty Metal is among the top sectoral gainer. Keep an eye on that one. Still managing to hold on to gains of almost 1%. Hind Copper, Nalco, Hindalco among the top gainers in the Nifty Metal. But that's the look right now of the market. A bit more of a fall that we've seen coming in for the Nifty 50, the Nifty Mid Cap, as well as the Small Cap. So keep an eye out on that. But this is a show where we solve all your stock-related queries. And to do just that, we have our market experts joining in with us. Independent market expert Shahina Mukadam, as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, to answer all those stock-related queries. Shahina, as well as Vaishali, good afternoon, and thank you so much for joining us. Hope you all had a great festive couple of days of off that we had as well. So hope you all had a great Diwali this time. But let's get started with the queries. First query for today is coming from Mohan Kumar, who's writing to us from Kerala. He's holding 35 shares of CAMS. The price is 3,980 rupees per share. Long-term investor, and he wants to know if he should continue to hold or look to sell this one. He's making a loss, China, on this one. But the capital market names, we've heard a lot of people quite positive on this one. What's your view coming in for CAMS?
Well, I believe that he's gotten at higher levels, but even at current levels, it's not the right time to average. Because while it has got a niche, with 85% of its revenues coming in, which is related directly to the mutual fund industry, but there the growth rate is actually softening in terms of, in the current quarters. And I believe that the other segments, which are smaller, like about 15% of revenues, are starting to contribute more. And there the average EBITDA margins are lower. Like their EBITDA margins about 25%, while currently it's about 40-45% on the existing business. So over a period of time, I think margins also will remain a bit softer. Having said that, I think in terms of valuation, it's a very, very strong platform company. But even for that, it is available at more than, if you see the EBITDA, EV, it's more than 10 times FY27 turnover, 10 times more, 10 times. So I think even for a strong platform company, it is expensive. So if I want to average, I would look to average it much lower. I would say closer to about, say maybe 10% lower levels from current levels. I would relook and review, but not at current levels.
Okay, not at current levels. You're saying right now is not the right time to average out. Vaishali, what's your view for this one, right? Since Jan, around that 5,000 market, what it touched about, slightly above that level. And then since then, it's just coming down. There's a bit of a downtrend that's there. On the charts and technicals now, what's the indication coming in for CAMS?
Hi, very good afternoon, Vinny. And yes, so CAMS, as technically from 5,500 levels, we have seen a good corrective move. Right now, we have seen a good consolidation taking place, but a prominent support lies at 3,600, 3,500 levels. So I would say since this gentleman has bought at higher levels, I would say technically it makes it right to average it out at 3,600 levels if the stock falls to that. And once you see the momentum and the further conviction comes above 4,000 levels. So 3,600 support, 4,000 above would get this stock back in trend.
Okay, keep an eye out on those levels over there right now for CAMS. Let's move on to the next query for today. We have Raman Khurana who's writing to us from New Delhi. He's holding 80 shares of RBL Bank. Price is 120 rupees per share. Wants to know that the recent news flow, obviously, that's come in with Emirates NBD planning to buy 60% stake in the company. Should they continue to hold or get out of this one? Shahina, your view for RBL Bank?
It makes sense to continue to hold because the money inflow that will come into the bank, this whole money, almost about 26,000 crores is going to flow into the bank. And while some amount may be set aside for capital adequacy, but the remaining quite a chunk of it is going to be used for growing the business. So I think over the next maybe 2 to 3 years, there is going to be a good growth. And this will also improve all financial parameters. Of course, maybe the return on assets will be impacted for about 2 to 3 years. But I think, still overall, the numbers will look much better on all other parameters, including the price to book growth. So I would say you continue to hold. Now he's gotten at very good levels. So hold.
Okay, continue to hold. That's the word coming in from China. Vaishali, what's your view coming in for the stock as well, right? In terms of an up move also, in the last 1 year, when you look at it, it's moved up only. There's no complaining there. But should they continue to hold? Maybe book partial profit? What's your suggestion?
I would say to book partial profit, but I would say keep 300 as the stop loss because the stock has given a breakout even on a weekly chart. So that shows that there is something happening for further up move. But of course, some bit of profit booking cannot be ruled out. So if you're a short-term trader, then 300 is the level and you can book partially and buy again at the other support levels. But if time is not the problem, then 300 acts as a good support. And in times to come, this can show levels of 380, 400 also. So, in my opinion, depending on your time horizon, one should take a trade accordingly.
Okay. You can look at maybe booking partial profits, but depending on your time horizon, Vaishali is saying you can look at trade also. Let's move on to the next query then. We have Rajesh Srivastav, who's writing to us from Noida. He's holding 90 shares of 197 Communications. This is at a price of 407. Making a profit on this one. Wants to know if she should add more shares at the current level. Shahina, what's your view first in terms of Paytm? What should they be doing?
Well, I would not suggest adding more at current levels. In fact, I would say that it is better to take some profits off the table for now, take half the profits, and the remaining half you can hold for the longer term. Because here again, I think with the fast run up of the stock, now at current levels, it's become a bit more expensive if you're looking at maybe a 1 year period. It's now available at about 8 times. The EVs 8 times FY27 revenues. So while this looks cheaper for a platform stock overall, but here for Paytm the margins are pretty slim, compared to the other platform stocks which enjoy very high EBITDA margins. So because of which I think 8 times EV to turnover to EV is a bit high. So I would say that, and also competition is coming in a big way. So I would suggest take half the profits and the remaining half you can hold for the longer term because they do have things going on in terms of a new. They are working on coming up with new applications which would be for transfer of funds, etc. So you can continue to hold the rest for the longer term.
Okay. And Vaishali, what's your view for Paytm now? Last 6 months, it's managed to give 42% return. Should they maybe, book slight bit of a profit? Though they're just asking whether they should add. So if you're suggesting add also, at what levels can they look to add more?
Well, I would agree with China because technically too, I think the stock has given a one-way move right from 680 to a high of 1300. So when I'm looking at the indicators also, there could be a chance of some profit booking seen at these levels. So if one has to add, I would say book partial profit. And if one needs to add, then I think accumulate in tranches, say at around 1200 to 1150 levels. The retracement cannot be ruled out to that level. So that way you can better your price and go ahead for the long run.
Okay. Let's move on to the next query then for today. This has come from Umang, who is writing to us from New Delhi, holding 150 shares of Federal Bank. Price is 50 rupees per share. They're making a profit on this one. Obviously, here also, China, we had that announcement that came in the morning for investments coming in for this bank as well, preferential issue of warrants. Your view for Federal Bank on the long term?
I think that's a very positive news flow. In fact, as you mentioned, a lot of banks are getting these funds, which actually is going to really strengthen them, enable them to invest in improving in tech and improving the overall field for the customers. So Federal Bank, I think overall, if you see the first quarter numbers and even second quarter, I think the first half, the growth in turnover in the overall loan book has been a bit soft, below 7%. But now with funds coming in over the next 1 to 2 years, I think the growth will again kick off. They've got a strong partner with now they will have 9.99% of Blackstone. I think that's a positive news. And overall, in terms of other parameters, in terms of price to book as well as in net NPS, etc., I think it is reasonably priced. So Federal Bank would be a hold at current levels, and in my view, you can also add at current levels.
Okay. Can add at also current levels and continue to hold. That's the view there on the fundamentals. On the technicals, Vaishali, levels that one should be keeping an eye out on.
Well, this stock is at all-time high, and even when I'm looking at the monthly chart, it's showing a robust up move. So in my opinion, this stock is likely to go towards 240, 250 levels in times to come. So continue holding with the trailing stop loss, or else every dip is an opportunity to add more.
Okay, every dip is an opportunity to add more. That's the word on Federal Bank. But on that note, we're going to sip into a very short break. But as we sip into the break, a quick note for our viewers. You must have noticed that there is a money control stock score just above the line graph. Now, this is a score that is assigned to each stock based on Money Control's multi-factor algorithm. It's calculated by analyzing over 40 parameters, including current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified, registered financial advisor for investment decisions. Welcome back to Your Stocks on CNBC-TV18. We still have with us Shahina Mukadam as well as Vaishali Parekh to answer all the stock-related doubts. Let's move on to the next query. This is coming from Mahindra, who's writing to us from Mumbai. He's holding 180 shares of GMM Pfaudler. Price is 1,320 rupees per share. He's holding it since the last 2 years. Now, he wants to know, should he continue to hold, sell, or maybe look to average at current levels? Shahina, your view.
GMM Pfaudler, if you see the last 5 years or 4 years, it has been an underperformer, both in terms of stock performance as well as in terms of financials. If you look at their revenues, from maybe FY22 of 2,500 crores, I think current year they should end at about 3,500 crores. So, I mean, there's not too much of a growth. And in terms of stock price, of course, it is underperformed. But having said that, I think from now, having spent all this time consolidating, I think valuations at current levels are now becoming attractive. Also, I think there is likely to be decent numbers that they will report in the first week of next month. So I would hold the stock as of now and review it post the numbers. But I see better levels coming from here in the medium term.
Okay, better levels can come in from the medium term. Wait out for the numbers before you take a call. Right now, hold the stock. Vaishali, your view coming in. What should they do? Should they maybe look to average, hold, sell? Given that, Shahina also just mentioned the stock has seen a bit of a correction and consolidation in the last 1 year. Does it merit maybe averaging at these levels?
I would say so. Actually, the stock right from 1900, the recent high of 1900, has been so sluggish. But there is a strong bottom formation at 1000 levels. Currently, since 2-3 days, we are seeing some buying interest, increase in volume, and some pickup. So near-term resistance comes at 1200 levels. So in my opinion, if it comes closer to 1000, add, and furthermore, add more if it goes above 1200 also, because above 1200, it confirms an uptrend going towards at least 1350 to 1400. So this is how your cost can also come down and you can see good returns.
Okay, thanks so much for that. Let's move on to the next query. This is from Nimesh Kumar, who's writing to us from Patna. He's holding 100 shares of Yatharth Hospital. Price is 390 rupees per share. They're making a very good profit on this one. A long-term investor wants to know whether they should continue to hold this one. Shahina, Yatharth Hospital, is that one of the better bets in the hospital space? And should they book out profits or continue to hold?
My topic would, of course, continue to be Apollo hospitals, but even Yatharth hospitals, if you compare it in terms of valuation, it is not expensive. Even at current levels, though it's been a very strong performer in terms of price post the IPO, which was about 2 years back. In terms of valuations, if you see on an average per bed, EV per bed is about 3 crores. So which is lower than some of its competitors, the larger hospitals. And also in terms of growth, they have got good plans for growth. From 2,500 hospitals as of now, they're talking of 3,000 hospitals in the medium term. So I would say you can continue to hold. Valuations are not very expensive. Keep a stop loss.
Okay, continue to hold. Valuations are not very expensive. Keep a stop loss. That's a word that's coming from China. Vaishali, on the technicals, what is it that one should be doing now? They've already been holding it for a while, right? Seems like they bought it at 390. But now, should they continue to hold?
I would say book partial profit, because when I'm seeing the charts, I think it's just a one-way rally right from 350 levels to now 800. So no harm booking partial profit, and again re-enter at around 750, 700 levels and better your trade.
Okay, book some partial profits. That's the word coming in from Vaishali. Next query, Kamal Shukla, who's writing to us from Uti, holding 30 shares of Jyoti CNC. Price is 800 rupees per share. They're making a profit on this one. Wants to know if he should remain invested for the long term in the stock. Shahina?
I would say it's better to take some profits off the table because valuation, in my view, for this size of company is pretty expensive. And this will, in my view, limit the upside that you see. So it was a very good, listing that they had. And post IPO, even this stock has given you wonderful returns. This was about 18 months back that they listed. They are CNC machines. They have got good defense orders. But in my view, despite all that, it is expensive. So I would take profits currently and then maybe relook at it a couple of quarters down the line.
Okay, relook at it couple of quarters down the line. That's a word on the fundamentals. On the technicals, Jyoti CNC, what's your view?
There's nothing much happening. The stock is just consolidating. So now that you're holding on, continue holding with stop loss of 800. And if the stock moves above 1100, book partial profit at 1200. That's how I would do this, because there is no clarity in the trend.
Okay, that's a word on the technicals as well. Next query for today. Jinesh Jha is writing to us from Jaipur. He's holding 100 shares of Swiggy. Price is 321 rupees per share. Wants to know if he should continue to hold or switch to some other stock. Shahina, your view for Swiggy?
I would say, in terms of pure valuations, yes, Swiggy is cheaper than Zomato. If you compare it, on EV to turnover basis. But there's not too much difference. So, and I think there's a lot of competition that will still come in. There are other players that will be listed soon in the next 1 odd year. There's intense competition. So I would stick with the leader. So I would stick with Zomato. And there, I think they're really building their business well across 3 verticals. And we saw the numbers also; they were quite good. It's a profit-making business, whereas Swiggy is not as of now. So why not just be in Zomato?
Okay, stick to eternal Zomato is the word on the fundamentals. Vaishali, your view for Swiggy? 321 rupees is the buy price. Should they continue to hold this or switch to some other name?
Well, I would agree. Switch to Eternal, because this is not really showing any strength right now. It's only in a consolidation. So partial holding should be in Eternal as well as and book have a small quantity in Swiggy.
Okay. That's the view coming in there for Swiggy. As of now, both the experts are saying switch to Eternal. But that was the last query for today. So Vaishali as well as Shahina, thank you so much for joining us. Hope you all have a great weekend as well. But view on the market, what is it looking like right now when you're looking at it in terms of Nifty, 25,757, slight bit off the day's lowest point. So in the last 30 minutes, maybe it's come up slight bit, very few points, but it has come up at least. Now it's down 130 points, 0.5% of decline for the Nifty 50 is what we're seeing. seeing. When you look at banks, that's also seen a bit of a recovery, because when we started the show, it was down almost 1%. Now it's down 7/10 to 8/10%. So some bit of that up move that we've seen in the last 30 minutes for the markets. And in terms of the up moves that are coming in, look at Intellect Design. In the last 30 minutes, that's seen an up move. Other than that, Ipca Labs, that's also come off the day's lowest point and come up a bit more. So keep an eye out of that. Intellect Design, a sharp uptick that we're seeing coming in. And also Aditya Birla Sun Life, they reported their numbers, so keep an eye out on that one. That seems to be a bit under pressure after its numbers as well. But that is all the time we have on this edition of Your Stocks. Thank you so much for tuning in, viewers. Up next, you have Closing Bell to take you through the last hour of trade.